Good morning, traders. Welcome to today's market review. This is Razak at CMTrading. Today is February 14th, 2018, and today is Wednesday morning. It's also Valentine's Day. Regular trading schedule is in effect today, so just be aware that there's no changes to today's minor holiday, if you will call it that. So happy Valentine's Day for those lovebirds. But let's take a look at the economic news for today. We're starting out at 3:30 South African time, monthly CPI number coming out of the United States, and also monthly retail sales coming out. Not such important numbers, but numbers enough to move the market if there are any surprises, so you just want to be aware of them. Now, more importantly, at 5:30 South African time, we have weekly oil inventories, and oil has been moving. We'll take a look at that in just a moment, but let's look at the market at large before. So we're looking here at the Euro USD, and we had a really nice rally yesterday. We had continued buying after the sell-off that we had last week and the previous week. And the consolidation that we had down here, we broke above this 122 80-ish level, 90-ish level, and once we hit 123, it was, we just took it further from there. So a nice 70 to 80 pip rally yesterday. So if you were able to catch it, good for you. We just discussed it. So it looks like we're correcting ourselves. What I'd like to see, maybe a reverse head and shoulders here. This would be one shoulder, this would be the head, and maybe if we rally enough, we could hold this level down here and then continue our rally into the 124-ish level. So let's see if we do get that later today. So we may see some profit taking today and maybe just consolidation for the next couple of days with the dollar versus the euro. Now looking at the GBP USD, didn't rally as much, and that's a little disconcerting because it usually catches up. So maybe we'll get that catch up later today as the market unfolds this week. USDs are still quiet here at 1191, not breaking out lower. Okay, we would like to see it break down to the 1182-ish level, below 1190-ish level. We could definitely see that close in. So let's see if we do get that. But what's encouraging about this is that it is loitering, or it is hanging out in the bottom range of it, okay, and it doesn't show like it's bouncing off of it so sharply and showing some weakness. So eventually I think we will get that breakdown, but let's just keep an eye on that and make sure that if you are short this particular pair, that you have a stop loss at 1197-ish level. So if it does turn around, you've at least booked some of your profit. Looking at the Aussie USD, we had a nice rally as well. Hit this 78.88-ish resistance level, previous support level, as you can see here, and then tallied off of it at 78, 73-ish level. So we're just below it. Nothing really to write home about. That would have liked to see a bigger bounce, okay, versus the dollar, but we haven't gotten that. So we may just see it finding a new trading range between 78.88-ish level and 77.80-ish level. So let's see if we do get that. Now looking at the USD Japanese yen, this is really important because breaking 108.61, which was a decent support level, okay, for the USD Japanese yen trading at 107.23. This is important because it means that the yen is getting much stronger versus the dollar. We haven't been this low in quite some time, okay, at least for the past year. If we look at a weekly chart, we were even lower at 101, 102 last year. So before that, I'm saying 2016. So with that said, we can definitely see some further correction, maybe to the lower 106-ish level, maybe even 105-ish level if we do continue this downwards momentum as the trading continues throughout the quarter. So let's keep an eye on that if that does continue on the downside. Like looking at gold, nothing really to write home about, 1333. So I would say that it's just trading quietly, okay, not a lot of volume. So maybe because it's not a point of interest anymore, okay, vis-a-vis the Dow Jones and the other indices that are trading. Now looking at oil, this is really important with the oil number coming out later today, trading at 58.17-ish, 59.17-ish level right now. And as you can see, we had this massive rally to 66.5-ish level, and we finally took it down on the downside, and we may see a nice bounce here, okay? Oil output in the United States has actually been an acceleration. So they're producing more oil and they're refining more oil so that, it's stabilizing some of the inflation and hopefully making the markets a little bit more stable, okay, and giving a little bit more of an umph so that the Dow Jones and the other indices can actually rebound in the short term, okay? It's a easy patch up, okay, in order to keep inflation in check, and that is what I think is happening. And in terms of oil, okay, if we do break this 59-ish level, we could definitely see it back down to the 55-ish area. Okay, so this is really a colossal point for us to be, and unless we get this bounce later today, and we will be trading between 59 and 64-ish level, and that's just a new range that we'll be in. So keep an eye on that as well as this produces throughout the day. Now, looking at the Dow Jones, we had a couple of string of positive days, and as you can see, we had a great day at the beginning of the week where we had 400 points on the upside, as you can see here, and then later on we continued our upwards momentum, and now it just seems like we're tapering off at this range, okay, at 24,695. So it looks like we're at the top of the range, and we need some sort of impetus to take us even further. Okay, remember we were trading at 26,149, and we're only looking at a 1-hour chart, so it's been volatile. Okay, to say the least, the Dow Jones has been pretty volatile, but economically speaking, the US is still quite viable. Everything is business as usual, and I do believe that we will rally up even further. Okay, it might not happen today, might not happen this week, but if we do get this breakout, okay, definitely if we break out above this 2750-ish level, okay, we could definitely see it going back to the 25,000 level. Okay, at that level, if it does, retrace a little bit, that's natural. Okay, 25,000 is mentally a big number. So although we're still down 1,650 points from our all-time highs, it's still a big recovery from 23,000 and a half. So, you got to keep it in perspective as to, the different levels that we're trading in. But a lot of volatility, and you are available in the afternoon to trade some really great opportunities as this unfolds. Looking at the DAX as well, looks like we're settling here at 12,245 and trading in a really tight range. So nothing to really write home about with the DAX, okay? I guess you could say that it's factored in, the prices are factored in, and everything is, trying to find itself at new levels until we have more direction or more conviction to go back up on the upside. This is Fred Razak. Will wish you guys a great trading day. Thank you.